Hey, what's up, my friends? So in today's training, I want to share with you the 4 golden rules, right, when it comes to using the moving average indicator. Number 1, avoid trading when the price is far away from the moving average, especially in a trending market. Why is that? Simple, right? Say for example, the market is in a trend like this, goes up, comes down, goes up, comes down, goes up, comes down, and then goes up. Then if you overlay with, let's say, a 50-period moving average, you can see that in this case, right, the price right now is quite a distance away from this respected moving average. And this is where you want to hold your horses, right, and not buy just yet. Why is that? Because there's a good chance, right, based on this historical price action of this market, is that the market could make a pullback. So imagine if you're buying at this highs and the market makes this pullback over here. Chances are you will be stopped out. Agree? So that's kind of like the first rule that I want to share with you is avoid trading when the price is far away from the moving average. Number 2 is this. Use moving average, right, as an area of value in a trending market. So what does this mean? So at this point you might be thinking, okay, so you don't buy when the price is far away from the moving average. So where do you buy? And this is where you can use the moving average, right, as a key to help you with it. So once again, this is a trending market. And then what you want to do is to identify, right, the moving average that the trend is respecting. So in this case, let's say this is the 50-period moving average, right? How do you know a trend is respecting a particular moving average? So this is where the 2 test techniques come into play. So this is where I want to see, right, the market test the moving average at least twice. Tested once, tested twice. If that happens, right, then there's a good chance, right, it could respect the moving average and test here for a third time. And this is where you want to look for buying opportunities. This is where the area of value is. Okay, so you can use moving average as an area of value when the market is trending. And to find out whether the trend, right, respects a particular moving average, you can use the 2 test technique, right, which I just shared with you. Number 3. There's no best moving average out there. So often traders ask me, hey, Rayner, which is the best moving average, man? Well, guess what? There's no best moving average. And let me prove it to you. So this is the chart of oil, 8-hour time frame. Okay, and you can see that in this case, this chart on this time frame is respecting the 20-period moving average. Tested, once over here, twice over here. On the other hand, you can look at another chart. This is the chart of Crocs, right? Daily time frame. This is the 50-period moving average. Tested once, twice, 3, 4, 5. A little bit of choppy price action over here and then continue up higher. So you can see that again, this chart on the daily time frame respects the 50-period moving average. And just to backtrack a little bit, if you see this chart over here, let me ask you, do you want to be buying at this highs? Well, if you just read or just study what I just shared with you, you know that this is not a good idea because there's a good chance this market could possibly pull back, possibly towards this previous resistance, which could become support, or towards the 50-period moving average. And if you were to buy around these highs, chances are when the pullback comes, if it comes, you are likely to get stopped out. Unless your stop loss is somewhere here, then okay, you don't have to worry about that, right? But chances are nobody's going to put a stop loss at this level. So moving on, right? This is another one. This is a wick trend. So you can see that in this case, the price respects the 200-period moving average, almost over here. So again, the message here is that there is no best moving average out there. The key thing, right, as a trader is to know the type of trends you want to trade, or know the current type of trend it is, right? And then use the appropriate moving average to trade along with it. So for example, if there's a strong trend, you can use the 20-period moving average. If it's a healthy trend, you can use the 50-period moving average to help you identify your area of value. And if it's a weak trend, you can use the 200-period moving average to help you identify your area of value. And finally, the last golden rule is this: avoid using moving average in a range market. Why is that? Very simple, because when the market is in a range, your moving average is probably something like this. And if you look at the price, it just goes up, comes down, goes up, comes down, goes up. You just slice through your moving average like hot knife through butter. And your moving average is essentially useless in a range market. It's kind of like, you getting friend zoned by a girl, all right? The only way out is to stop messaging the girl, to ignore her totally. And it's the same over here. If the market is in a trend, ignore the moving average. Don't use it at all. That's how you kind of, avoid those unnecessary losses. Okay, so that's the 4th and golden rule. So as a quick recap, here's what you've learned, right? Number 1, avoid trading when the price is far away from the moving average. Number 2, you can use the moving average to act as an area of value using the 2 test technique, which I've just shared with you. Number 3, there's no best moving average. Different types of trends, they have, different types of depth of the pullback. And then once you know that, right, once you can identify the type of trend there is, you can use the respective moving average to kind of trade those trends. For example, healthy trend is the 50 MA, strong trend is the 20 MA. And finally, you want to avoid using moving average in a range market because it's pretty much useless. So with that said, right, I hope you enjoyed it. Smash a thumbs up if you do. If you don't, then hit the subscribe button. With that said, I wish you good luck, good trading. I will talk to you soon.